particularly Bitcoin, is ultimately a
Mhm.
financial asset.
Yeah.
And so if you want it to function as a financial asset, you need all the things that finance people do. The biggest mistake, the most important people mistake, I think 90% of people in crypto are making, is that they don't realize that ETFs are multi-year stories. So
Mhm.
usually in an ETF, it really struggles to get any assets in its first 6 months or its first year or its first 2 years. And it hits its stride in years 3, 4, 5, 6, 7, and 8.
Mm.
If you look at the gold ETF when it launched,
Yeah.
everyone was excited. The best performing ETF of all time. Year one was the smallest year I think maybe it ever had until it had a negative year. It had 8 years of ascending flows.
The recent surge in Bitcoin's price has highlighted the growing role of cryptocurrency in the financial world, particularly with the emergence of exchange-traded funds, ETFs, focused on digital assets like Bitcoin. These Bitcoin ETFs have quickly gained traction, accumulating billions in assets and setting new records compared to traditional financial products. As Bitcoin's value climbs, more investors are seeking exposure through these ETFs, incorporating digital assets into their portfolios despite concerns about volatility and risk. Matt Hougan, a leading expert in crypto, ETFs, and financial technology, discusses the common expectation for rapid success with new ETFs in the crypto industry. While traditional ETFs often take years to reach their full potential, the introduction of Bitcoin ETFs has sparked strong interest among mainstream investors. Bitcoin's straightforward narrative as digital gold and its well-established valuation model make it a compelling investment choice, especially during times of price growth. As digital assets continue to gain acceptance, Bitcoin ETFs represent a long-term growth opportunity, with the potential to further integrate cryptocurrencies into the financial mainstream. The recent price increase only reinforces the momentum, signaling that the market is beginning to embrace these innovative financial products. Watch clips from the interview to hear more about Matt Hougan's perspective. Don't forget to like this video, subscribe to the channel, and enable post notifications for more updates and in-depth content. Thanks for joining us once again. Enjoy the video.
The most successful ETF launch prior to these was the Qs, the NASDAQ 100 Qs, which launched in the 1999 tech bubble, right? Perfect timing, and gathered $5 billion in assets. And the Bitcoin ETFs are up to 20. The year's not over. I think that number could go up significantly after we get past the election. So maybe we end at 25 plus billion dollars. So that's not just beating it. That's like shattering the record, right? It's not even close. Investors were very eager to gain exposure to this asset class. The ETFs came off with an incredible offering from a price perspective. And that's just a perfect combination. And to see 20, it's going to be 25. It could be more than that, $1 billion in their first year. Yeah, it's just a grand slam. I think there are two factors at work. So the first is I think there were a lot of non-long biased investors in ETH, the grayscale product, right? Because once the Bitcoin product converted, everyone knew we would eventually get an Ethereum ETF. Now, we got it faster than we thought, but everyone knew that would happen. And so I think a lot of the assets that were in ETH at that point were people arbitraging the discount in that market. And those just rotated out when we switched over to an ETF. If you look at the individual ETFs, they're doing quite well, right? iShares is above $1 billion. At Bitwise, we're around $300 million. $300 million in 3 months in an ETF is like one of the 50 fastest growing ETFs of all time, right? So doing just fine from that perspective. But I think a lot of money rotated out of ETH and the arbitrage play. The other factor is that it was just too soon. I mean, I said this before the ETF launched. It would have been better to launch those products in January or February of 2025. People are still getting their hands around Bitcoin and their hands around crypto and accepting crypto as an asset class. Once you have to have a complicated conversation about how Bitcoin is different from Ethereum with a financial advisor, that's like a many month conversation. It would have been better to have more time for Bitcoin to season before we got ETH. But, look, I think we'll look back in a couple of years and there'll be $10, $20 billion in Ethereum ETFs and everyone will be happy. I think ETH is still finding its exact place in the world. When we talk about Bitcoin, we talk about it as sort of filling the same role as gold, but in a digital format. And that's a beautiful, simple narrative. I think it's accurate. I think a lot of people are concerned about fiat debasement. I think a lot of people are concerned about hedging against inflation. I think a lot of people think monetary authorities are out of control. And so Bitcoin sells easily into that. Also has an easy valuation metric, right? You can look at the market for gold, you can look at the market for other stores of value, and you can arrive at a valuation target for Bitcoin. So that's easy. When we talk about Ethereum, what you're talking about is a public computer. We talk about it as a new platform on which you can build applications that can change the world, right? So just like iOS is a centralized platform on which applications like Uber are built, Ethereum is a decentralized platform on which applications are built. The beauty for institutional investors, if you look at the killer apps in crypto outside of money, they're all built on primarily Ethereum. Stablecoins are an absolute killer app that institutional investors can understand. The majority of stablecoins are issued on Ethereum. Tokenization is a killer app that institutional investors are more excited about than the reality in the market, but it's still a big idea. And all of that, or most of that, is being built on Ethereum. Even when you get to sort of individual applications, a lot of them resolve to Ethereum as well, right? Polymarket built on Polygon, but resolves ultimately into the Ethereum ecosystem. So when you talk about this new application, sort of new application layer on which killer apps are built, I think that appeals to institutional investors, but it's a more complex story, right? And it's a more complex valuation case, and it's newer. So I think it will inherently take more time.
Matt Hougan underscores the notable success of Bitcoin ETFs, which have amassed $20 billion, significantly exceeding the $5 billion raised by the NASDAQ 100 Qs during its 1999 launch. With projections to reach $25 billion, this represents a substantial milestone for Bitcoin ETFs. In contrast, Ethereum ETFs, initially dominated by arbitrageurs, experienced asset rotation following Bitcoin ETF launches. Despite this, ETFs like iShares and Bitwise are performing well. Hougan, however, argues that Ethereum ETFs may have been introduced prematurely as the market is still adjusting to Bitcoin. Matt Hougan highlights two misconceptions about ETFs, especially in crypto. First, investors focus too much on daily ETF flows, which can be misleading due to timing discrepancies. He recommends looking at weekly or monthly flows for a clearer picture. Second, he stresses that ETFs are long-term investments, typically taking years to reach full potential. He cites the gold ETF's gradual growth and predicts similar trends for crypto ETFs. Hougan views ETF growth as a steady staircase rather than an immediate spike. Let's go back to the interview and watch more clips to gain insights from Matt Hougan.
I would say there are two different sides of the spectrum. One is the obsession with daily flows is completely wrong, because the way authorized participants work, the flows that you see reported in an ETF today may have come in yesterday, may have come in the day before, may be coming in 2 days from now, right? There's not a one-for-one exact alignment of when an end investor wants exposure to X and when you see a flow posted on the board. And because people don't understand the plumbing of that, they overly focus on daily flows. My advice would be look at weekly flows, look at monthly flows. Monthly flows really smooth that out, and you get a feel for where people are going. Daily flows, I don't know, we had $100 million in our ETF the other day, and then we had zero. It wasn't that there was zero demand. It's that APs are averaging it out. So that's one mistake. The biggest mistake, the most important mistake, I think 90% of people in crypto are making, is that they don't realize that ETFs are multi-year stories. So usually in an ETF, it really struggles to get any assets in its first 6 months or its first year or its first 2 years. And it hits its stride in years 3, 4, 5, 6, 7, and 8. If you look at the gold ETF when it launched, everyone was excited. The best performing ETF of all time. Year one was the smallest year I think maybe it ever had until it had a negative year. It had 8 years of ascending flows. The reason I bring that up is I have high degree of confidence that flows in 2025 will be bigger than flows in 2024. And then I have a high degree of confidence that flows in 2026 will be bigger than 2025. The reason for that is it's still getting turned on at Morgan Stanley. It's still getting turned on at Wells Fargo. People are still studying it. It's moving into the mainstream. So the biggest mistake I think people make is like imagining that we're on this one-off rocket ship that then lands. It's actually no, this is a staircase, right? That's the way every ETF almost ever has worked. Maybe this time it's different. Who knows? But my bet is that we're on that staircase and we're going to look back in a few years at like, oh, wasn't 2024 cute? I mean, the first thing to remind traditional investors is that like Bitcoin's not like a virus. If you add 1% Bitcoin to your portfolio, you can lose 1% of your money. It doesn't infect the other 99%. Nothing terrible happens. You buy it and you wake up the next morning and you're just the same as you always were. We love this study. It's looking at what happens when you add 1, 2.5, 5% Bitcoin to a 60-40 stock and bond portfolio. And I think this really teaches you an important thing. So I would look at the 2.5% line. That's sort of the average Bitwise client allocation. And what you see here is that adding just 2.5% Bitcoin to a traditional portfolio significantly boosts your overall return, right? 50% over this time period. It boosts it multiple percents over a 1 year or 3 year period. And then the important thing is it does that without increasing the standard deviation, right? Your standard deviation goes from 10.25 to 10.58. And the reason for that is something that everyone knows, which is Bitcoin has low correlations to stocks and bonds. And when you put a low correlated asset and rebalance it in a portfolio, it leads to higher risk adjusted returns with no real impact on volatility. You can see here, the correlations we have from our quarterly report. The US equity correlation is below 0.5, which means it's still low. That's actually elevated from where it usually is. It's usually below 0.25. But even at 0.49, it's still so much lower than the correlation between most assets.
Meanwhile, as Bitcoin's price hovers around the $69,000 mark, optimism surrounding altcoins is rising. Bitcoin has shown resilience in testing key resistance levels, which has led many traders to anticipate significant gains in altcoins. This optimism extends to cryptocurrencies such as Solana, Ethereum, and Coin, which may see upward trends if Bitcoin continues its upward trajectory. Ethereum's current trend is a topic of interest for analysts, with the cryptocurrency needing to hold above 0.046 Bitcoin to prevent further declines. Recent consolidation hints at a potential reversal if Ethereum can break through its descending trend line. This critical support level is being closely monitored by traders who believe it will play a crucial role in Ethereum's price movement in the coming weeks. Meanwhile, Solana is maintaining its competitive edge against Ethereum with a current value of $158. The strength of its network and active community is boosting investor confidence. Market analysts point to a breakout from a descending wedge pattern, with potential target prices for Solana set at $159.6 and possibly higher. If Solana maintains its momentum, it may reach further price targets of $162 and $188. In conclusion, Bitcoin's recent surge is enhancing prospects for altcoins, with analysts predicting favorable conditions for cryptocurrencies like Ethereum, Solana, and Coin. There is growing optimism that altcoins will continue to experience price peaks in the near future. As we wrap up, what are your thoughts on the growing role of cryptocurrency ETFs in the financial world? Do you think digital assets like Bitcoin and Ethereum will continue to reshape traditional investment strategies? Or will more time be needed for full integration? Please share your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching, and don't forget to subscribe.